Hey everybody, welcome. Just going to give it a couple more minutes, get people in the room here and get set up on Facebook Live. Roger Gurr, looking good there, my friend. Liking it. Good to see you. So just give it another couple minutes and we'll get started. Hang tight. Okay, let's get started. I'm sure there'll be more people joining us as we go along. Good crowd already, but there'll be more coming in. And there are people watching us on Facebook too. So thanks for coming out to our webinar this morning. This is about the, I don't know, probably the 15th different webinar we've done in the last 35 days of the Chamber. So we're trying to keep everybody informed and educated on what's going on during this pandemic. I won't say unprecedented times because it has happened before, just none of us lived through it. But there is historical precedence to it all. Lots of stuff going on, lots of information coming at you. You get our emails, most of you will get our emails every morning, which sum up the new stuff that's there. Our website's got great resources, as does MMPs, that we'll talk about in just a second. But we want to get you a chance to hear firsthand from some of the experts in our community and a chance to ask them some questions. So I'm going to turn it over without much further ado to Mr. Ryan Corder. He is a partner and business advisor with MMP in Port Moody. And Rochelle Gordon, and she's the manager and Canadian tax specialist with MMP and works out of Port Moody also. Just kind of condense those. I know I could go on for a long time about you two, but we'll keep it a little shorter because we want to get to the presentation. MMP has been a great partner with the Chamber, been in the Port Moody community for a few years now and very involved, and we're really happy to have them come speak today about some of the stuff that's going on and answer your questions. So without further ado, let me turn it, I think, Ryan, are you going to get started?
Yes.
Turn it over to Ryan and Rochelle. Take it away.
Great. Thanks a lot, Mike, for the intro, and you as well as Stephanie for organizing our webinar this morning. I know you guys have been working hard over the last month and a bit, just dissecting all the information and updates and communicating that out to the members. So that's certainly been appreciated. And we wanted to host a webinar this morning, specifically now that the emergency wage subsidy applications have launched and gone live as of yesterday. What we're hearing from many of our clients and small business owners is there's still a lot of uncertainty and questions over the program, specifically more on the technical side. I think with all the communications and updates from the government, most people have a general high-level idea of the program. But now that it's time to hit submit on those applications, we thought we'd dive into a little more technical details as businesses start to get ready to actually submit these applications. So just a bit of a background on our firm and our practice. So we are the 5th largest accounting tax consulting firm in Canada, and while we are national Canadian in scope, we do remain local in our focus in our communities. The Tri-City office of MMP is located in Newport Village in Port Moody, and that's also where both myself and Rochelle are based in practice out of. Now, looking at our agenda, we'll just kind of go high level over some background, not a ton of details on it. What we're going to focus on is the eligibility criteria. There's a number of options and elections that are going to be available while completing your submission. And so we want to talk a little bit about that and then really get into the calculation. There's a lot of terms like qualifying, eligibility that we're going to try to define and clarify. And we'll break it down into a nice order that you can work through to get you prepared for your application. Then we'll talk briefly about some documentation requirements. We're getting a lot of questions about that. And then as well, just touching on some compliance issues that we just wanted to bring to everyone's attention. And then of course, at the end, we'll open it up for any questions. So high level, what is the emergency wage subsidy? So throughout this presentation, we'll just refer to it as CEWS, as most government programs have got a nice little acronym to go along with them now. So we'll just continue to call it CEWS, but effectively it's a wage subsidy that at the heart of it is really intended to help businesses that are facing a financial hardship caused by the pandemic. There's really two purposes. The first being to allow businesses to retain employees while experiencing these challenges. And then the second one is really to allow them to rehire employees that they may have previously laid off. And so it's really those two principles at the heart of the program. It is retroactive to March 15th. So while we're at already April 28th here, any applications will go backdate and be effective as of March 15th. And it's available for a 12-week period that extends till June 6th. And when we'll see a table briefly coming up here, that 12-week period has really been broken down into three eligible periods that are 4 weeks each. And it's up to $847 per employee per week. And if you extend that out over the 12-week period, you're looking at up to $10,000 per employee for the life of the program that eligible businesses may receive. As we mentioned, the applications opened yesterday, but you do have actually until October 20th to submit your application. And applications, as the Chamber communicated out yesterday, they're not actually going to be processed until next week. So our message that we're advising our clients is, don't rush into it. Make sure that you get it right. Make sure that you understand the calculation and your eligibility. As a business owner, we want to go to bed at night not having to worry about whether it was accurate or if there's any potential issues or clawbacks or anything. So, our recommendation has been to, make sure you get it right and don't just rush into it. And so we'll kind of walk through some things that you need to consider there. So before we get into the technical criteria, what I think it makes it easiest if you break it down into real 4 key criteria or definitions that you need to understand, and they really kind of naturally flow in an order. The first step being identify whether you're an actual eligible employer, and if you are, you need to understand what your qualifying revenue is and whether you meet the revenue requirements. Once you do that, you need to identify who are your eligible employees. And then once you do that, you need to identify what is their eligible remuneration that qualifies. And that's really where the tricky part of the calculation comes in. And then we also need to understand the timelines. There's both a qualifying period, which is specific to the wage, and then there's a reference period, which is really relative to the revenues. And those time periods aren't the same, so it's just understanding the differences of those two. So now I'll pass it over to Rochelle, who will start walking through some of the qualification criteria.
Thank you, Ryan. So the first thing is you must be an eligible employer. So what does that include? It includes individuals, trusts, taxable corporations. That doesn't mean the corporation necessarily paid tax, but they have to be applicable to tax. Partnerships consisting of eligible employers, nonprofit organizations, and registered charities. So this includes entities such as public bodies, crown corporations, and university. And you must have experienced an eligible reduction in qualifying revenues. So we'll go over that in a little bit, but your company must have experienced a decline in revenues, and you must have a payroll account as of March 15th. So you can't have set up a payroll account in April and qualify for this program. You have to have an existing payroll account as of March 15th. So for the revenue test, so you're required to have a decline in revenues, and generally this is determined on a standalone basis, on an entity by entity. So if you have multiple corporations in your structure, you want to start by looking at each one individually. So when you're looking at your revenues for that corporation, you exclude extraordinary items. So this would be items outside your normal business activity. Let's say, for example, if you sold a building. You also do not include revenues from this program or the temporary wage subsidy. And amounts from non-arm's length parties also excluded. So this could be a situation where you have multiple corporations in your structure and you're paying a management bonus from one to the other, you would exclude those items. And under these rules, certain entities having all or substantially all of the revenues from non-arm's length parties could not qualify. So that means if 90% of your revenues are from non-arm's length parties, that entity will not qualify. There is an election to look at revenues on a consolidated basis, so we'll go over that in a couple slides. So for the qualifying periods, there's 3 of them, and they're roughly a month long each. And so within each period, you have to show a decline in revenues. So for the first one, which is March 15th to April 11th, you have to show a 15% decline in revenues. And so the reference periods is March 2020, and you're taking that back and comparing it to March 2019. Or you also have the option of comparing it to an average of January and February of this year. So you would look at March 2020 and compare it to either March 2019 or January and February of March 2020. So there's a couple options to see if you can meet that test. For the second period, we're looking at April 12th to May 9th, and your reference period is April 2020, and you're going back to April 2019. For this period, it's a higher criteria, so you must have experienced a 30% decline in revenues. You can also look at the average of January and February of 2020 again. So there's 2 options there to see if you meet the 30% reduction in revenues. For the last period is May 10th to June 6th, and again, you have to have a 30% reduction in revenues. And for this criteria, you're looking at May of 2020 and carrying that back to May of 2019 for the comparison. Or again, you can look at January and February of 2020 and compare it to May of 2020. If you do decide to use January and February of 2020, you must do that for all 3 periods. And once you're eligible for one period, you automatically qualify for the next period. So what this means is if you qualify for period 1 and you have a 15% reduction in revenues, you don't necessarily have to have a 30% reduction in revenues for period 2. You just automatically qualify for that period. And alternatively, if you don't qualify for period 1, but you qualify for period 2, you automatically qualify for period 3. It's also interesting to note that the reduction in revenues do not necessarily have to be due to COVID. There's no requirement that the reduction of revenues relates to COVID. So if you are using January and February of 2020, you must use this for all 3 periods. And if you are a relatively new business and you were not carrying on activities as of March 1, 2019, you must use January and February of 2020. And you can't round up to meet that 15% or 30%. It's an all or nothing test. So for example, if you're at 14.6%, you do not qualify for that first period. So it's an all or nothing test.
And Rochelle, one comment I was going to just add is one of the items that's important to make sure you understand and how it's going to flow through the remainder of the program is which reference period you're going to be choosing for your revenue, because if you use the prior year month, you do have to continue to use that for all 3 periods. Whereas if you use January and February, the same thing, you have to continue to use that. So while you may select the period that gets you qualifying in period 1, it is important to look ahead to see if that will continue to qualify you into the future periods. And so that's one of the things, because once you submit that application, the cards are on the table. You can't go back and change your reference period if you find out in a subsequent month you're now pushed out of it, and then you kind of want to balance it and look at comparisons in terms of which subsidy or which period makes the most sense if there's going to be some issues in terms of which your reference period is.
That's correct. And so if it's possible to wait to apply for this, it might be beneficial to wait until you understand what your revenues are for the 3rd period, just to see which method will provide you, when you're doing the calculation, will make you eligible for all 3 periods, or what's the most advantageous way to look at it. So when looking at revenues, you're generally using the accrual method, but there is also another option here to qualify. You can look at revenues on a cash basis, and this is on an election. If you do look at revenues on a cash basis, you must use this for all 3 periods as well. And then I mentioned earlier as well, an affiliated group can elect to look at their revenues on a consolidated basis. And this is an affiliated group as defined in the Income Tax Act. So definitely check with your accountant to make sure all the entities qualify as an affiliated group. And this will allow, this is a good example of, let's say you have a couple corporations, but only one corporation is paying all the wages, and it's another corporation is the one that has experienced a decline in revenues. This option will allow you to look at it on a consolidated basis. So again, it's just another way that you can potentially meet the revenue reduction criteria.
And again, that is an election that once you make it at the start, you're held to that consolidation basis throughout the remaining periods as well.
Exactly, yeah. So again, it's important to try and consider all your options to decide which one is going to maximize your benefit under the program. So now if you've determined you are an eligible employer and you've met the revenue reduction criteria, we can move on to the next criteria, which is, do you have eligible employees? So an eligible employee is an individual employed in Canada, and they have not been without remuneration for 14 or more consecutive days in the qualifying period. So this just kind of prevents double dipping. So we'll go back to the qualifying periods again. So for example, let's say you laid off somebody on March 1, or if you were hiring a new person and you hire them today, or you bring back that employee today, they would qualify for period 3, but they would not qualify for periods 1 and 2. And that's because within each of those periods, they were without pay for 14 or more days. It is possible to have an employee that was without pay for 14 or more days, but if it straddles a period, then you might still be eligible to have that employee qualify for each period. So what counts as eligible remuneration for the calculation? It's salaries, wages, and commissions, and it must be paid in respect of the week in the qualifying period. So what that means is, for example, if you had a bonus that was booked and accrued relating to the beginning of January, but it was not paid until April, you could not use that revenue as part of the employee's eligible remuneration. And the remuneration must be paid between March 15th and June 6th.
And another situation where this can provide some complexities in the calculation would be commissions. So we're working with a lot of car dealers who are having issues in terms of, when commission was earned versus paid and how that actually falls within the qualifying period. Because just because it may be paid after March 15th doesn't necessarily mean that it's eligible remuneration, because it depends on when it was actually earned in respect of.
That's correct. So it does not include dividends, severance pay, stock option benefits, or remuneration paid to an employee who was without remuneration by the employer in respect of 14 or more continuous days in the qualifying period. And what that means is, if you had someone who was not working for 14 days in that period, but they still had income in that period, you can use that revenues from that period to qualify. It can't include amounts that are expected to be repaid back. So if you pay your employee and the employee loans you the money back, that does not count. And as well as if income falls below the baseline remuneration after the qualifying period, and I'll go into baseline remuneration a little bit more in the next slide, but that's basically what the employee was earning before March 15th. So the program wants employees to be paid after this program is over, similar to what they were being paid before. And you can't temporarily bump up an employee's pay to maximize this benefit. So if someone's, let's say earning $20,000 a year roughly, and you bump them up to $40,000 just to maximize this benefit, that will not qualify. So getting into the baseline remuneration, so it's the average weekly pay between January 1 and March 15th. And so you total all the income up and you divide it by 10 weeks to get your average. You can exclude a 7-day period when employee was not working. And it must be paid by the eligible entity to the eligible employee. And for non-arm's length employees, so this would be, spouses and children or major shareholders, the subsidy can never exceed 75% of the baseline remuneration. So what this means is, for non-arm's length individuals, you must have been paid earning a salary prior to March 15th in order to qualify for the program. So for the calculation, before we get into the actual calculation itself, there's several things that need to be deducted from the subsidy. And the first thing is the 10% temporary wage subsidy that you are eligible for. So even if you do not take advantage of the program, you must deduct this amount if you are eligible for it, as well as you must deduct any amount you're receiving for a work share program. So that's one of the other new benefits that the government's offering right now. And then lastly, you can add in the employer CPP and EI for employees that are on leave with pay. So for the calculation itself, it's the greater of two amounts. So the first amount is 75% of the remuneration paid to a maximum of $847 per week. and nil for non-arm's length employees. Non-arm's length employees, again, can qualify based on the second part of the calculation. So the second part of the calculation is the least of 3 items again, and it's the eligible remuneration paid to an employee in respect of that week. So this can allow the subsidy to be 100% of what someone is earning, so long as it doesn't exceed $847. And there's also the 75% of the baseline remuneration. So again, this is the amount you were earning prior to March 15th. So for an example, if you had someone earning $2,000 per week prior to March 15th, and due to the economic conditions, their pay has been reduced and maybe their hours have been reduced to $750 per week, in comparing an arm's length individual to a non-arm's length individual in this situation, because the non-arm's length individual was paid prior to March 15th, they will still be able to receive the subsidy. And since the current remuneration is $750 per week, which is less than the maximum of $847, that the full amount can be qualified. So basically what this means is you can have employees that are earning less than $847 per week, and you can have the full subsidy for the full wage. And this also allows you to hire back employees that have been laid off or hire new employees, and are they still qualify for the subsidy? There's also a 100% refund of certain employer-paid contributions, TEI and CPP, for employees that are on paid leave. So this is employees that you're still continuing to pay, but that are currently not working. And the employee must also be eligible for CEWS, and employers are still required to collect and remit the source deductions. Okay, I'm going to turn it back over to Ryan now to wrap up the presentation, and he'll go over how to apply and maintain the records.
Okay, thanks, Rochelle. So in terms of the application process, it opened yesterday. There's really 3 options that you would have to submit your applications. First being the CRA's My Business account, which you may have registered for. The second is an online application form. And then the third is using your authorized representative, which is generally your accountant. Because they're authorized rep, they do have the ability to actually submit that application for you. The calculation template has been posted on CRA's website. And so one important thing to note is that you do need to walk through it and fully complete the actual calculation before starting the application process online, regardless of which means you're using to submit the application. Now, payments are going to be issued automatically through your payroll account. And if you're set up for direct deposit, they'll be automatically deposited. And the expectation is within 10 days, you should be seeing those funds once your claim is approved. And in terms of actual records to retain, there isn't specific guidance on this, but what we do know is that employers are required to keep detailed records of both the reduction in revenues as well as the detailed records of the remuneration to the employees. Submitting the application, it's going to go through an automated verification process, and some applications will be selected upfront for secondary verification, which may be by phone call or other means to clarify any questions. The eligible employers submitting the application are going to have to sign off on to attest on the information provided. And that's going to be the person who's principally responsible for the financial activities. So there is an actual section on there where they do have to attest to the information being provided. And that's regardless of whether it's your authorized rep or somebody else actually submitting it. And just a comment, the government does want employers to continue paying employees based on their pre-crisis earnings, but it isn't actually required in order to qualify. I think that there was some confusion on that when this was first rolled out. There isn't a requirement to actually top up that additional 25%. And so for those businesses who went out and rehired employees back, you can still do that and are able to have done that without actually having to incur the 25% cost on top of that. And then of course the subsidy is going to be included in the employer's income in the period it's received. Now, in terms of just some general comments of compliance and penalties, this is obviously a very significant program. So there is legislation that does include some fairly significant penalties for non-compliance. So anyone that's found not to meet eligibility requirements is of course going to be required to repay it. But then anyone found to have engaged in any artificial transactions to reduce revenue or artificially change payroll or backdate or anything like that, it's potentially 25% of the claim will be assessed. And then for gross negligence, it's actually 50% of the amount. And then, of course, they throw in there that it could result in even imprisonment, which doesn't sound fun. So, compliance with this is obviously, going to be significant. And we are expecting a fairly robust audit program to be rolled out after the dust settles on this. And that's one of the main reasons we're advising clients to make sure that, you get it right before rushing to actually submit the application. And what's also in the legislation is that the minister has the authority to make the names of the people claiming this public. For what reason, we don't really know yet, but it is something the minister has available to publicly release the names of applications.
Yeah, we were referring to this as the name and shame rule, and it's just designed to ensure compliance.
But I think having said all that, I think it's just important to, to recognize what the intent of the program is. And it's not something that's meant to be, a tax planning opportunity, but it's really, assessing whether you qualify and meet the criteria, and then looking at the numbers and the calculations to make sure that you're taking advantage of the right criteria options and elections that are available to maximize, what you would actually qualify for. So I know that was a lot of information in a half an hour, but we'd like to open it up to the floor for any questions. I will just note, as Mike mentioned, we do have a business advice center on our website where we're posting a lot of articles, tax alerts, and analysis of all the government announcements. And so we just included a link to that. So you can go on there, browse some of the information, as well sign up for our updates, which are automatically blasted out anytime there's any updates or any new announcements.
Great, thank you. Ton of great information there. Clarified a few things for me too, I'm sure for a lot of people. So if you have questions, if you're on the Zoom call, please put them in the chat box there and I'll get them answered. If you're on Facebook, please post them there and Steph will send them over to me. And I've got a question from Vicky on Facebook. She's asking, will the wage subsidy apply to a new employee hired after March 15th for a 3 to 6 month temporary position?
Yes, I can answer that one. So that will apply to a temporary employee, so long as they're not without pay for 14 days in a consecutive period. So again, if you hire somebody today, they would qualify for period 3, so long as they were employed all the way up until June 6th.
Okay, Vicky, I hope that helps you out there. Okay, folks, I'm sure you got some questions. Okay, Gabriel's asking something here. Can you explain the different claim periods again? I missed it. And how do I choose which one to claim? So that was you made me go back quickly because that was fairly detailed. And I think you did a great job of explaining it because it isn't quite clear. So if you just quickly go over that again, Ryan and Rochelle, that'd be great.
Sure, let me just pull up the slide here. Where was that? Okay, there we go. So there's the claim periods. So you can apply for any claim period that you're eligible for. So there's the 3 claim periods, March 15th to April 11th, April 12th to May 9th, and May 10th to June 6th. And you really want to look at each of those separately. So you have to meet that revenue test, and then you're also looking at the employee's pay within those periods. So you kind of do the analysis on each one. If you qualify for period 1, you do not need to do the analysis for period 2. You would automatically qualify for that one, so you wouldn't need to do the revenue reduction test.
Yeah, and this is where the eligibility periods don't line up with the actual claim periods. And so the second column on the left, the claim period, that's where it's specifically referencing the actual payroll period for the wages between the March 15th and April 11th, and whereas the reference period is specifically looking at the revenue side of things and where you actually need to compare your revenues to determine whether you qualify. And then once you qualify, then you focus on the claim periods to determine the calculation of the eligible wages.
So you definitely want to start with period 1, just so you can determine if you need to do the calculation for period 2.
Awesome. Next question, they're starting to come in now. Michelle has a question about eligible remuneration. We do payroll on the 15th and 30th. We have part-time employees who are paid on a lag. So for example, the recent April 30th payroll, the part-time hours were actually for the 9th to the 25th. So when calculating the eligible remuneration for part-time employees, would you use actual hours per week or hours paid on payroll? Actual hours per week or hours paid on payroll. That makes sense? So they do payroll on the 15th and the 31st.
Yeah.
We have part-time employees who are paid on a lag. So for example, the recent April 30th payroll, the part-time hours were actually for April 9th to 25th. So when
so it would be
return, yeah, go ahead. Sorry.
Yeah, it'd be a pay earned in respect of that week. So determining when the pay was earned, but then it has to be paid by June 6th. So it has to be paid in between March 15th and June 6th.
Okay. Jeremy's asking, I'm an accountant for a corporation that recently purchased, easy for me to say, a fully owned subsidiary this past September. They have been in operation for several years. Would the 2019 revenue be eligible for calculation?
I believe it would be.
Okay. Maybe do a little more digging on that just to confirm that, Jeremy, but we think it would be. And Cindy is asking, our payroll does not match the dates for the format presented on the form. That will mean if you have a large number of employees, it'll be quite onerous to analyze and come up with accurate figures. Do you have any suggestions how to manage this other than putting in the time to build a spreadsheet?
Yeah, and that is really one of the biggest challenges we're seeing is you know that they pick the claiming periods based on running the weeks, and a lot of times that isn't matching natural pay cutoff periods. So unfortunately, there's not really any tricks to doing that other than actually sitting down and working through the spreadsheet and doing those calculations. For a small business with a couple employees, it might be a couple hours, but I've worked with some larger organizations over the past couple of weeks who have literally had their accounting team working on this over the past couple of weeks trying to figure out these calculations. So unfortunately, there's not any real shortcuts, specifically because you want to be able to have that documentation prepared to support your claim. And so you really do need to go through and run those calculations based on the criteria.
Okay. Document. Gabriel's following up. So to his earlier question, I believe. So if I apply for period 1 and I get approved for that, I won't need to claim for period 2 and 3 as I'm automatically eligible for the rest?
No, so that's where it does there is another little wrinkle. So if you qualify for period 1, based on the comparison for the months, you automatically qualify for period 2. So if period 1, you meet the 15%, then you're going to be guaranteed to be able to apply for period 2. However, in order to qualify for period 3, if you look at the bottom right corner for period 3, you either need to meet the test for comparing May or have been eligible for period 2 based on its criteria. So qualifying for period 1 doesn't flow all the way through all 3. It gets you automatic to period 2, but then to qualify for period 3, you do have to either have met period 2 based on the revenue test or meet the comparison for May. So it is a little tricky once you get to period 3, and you don't get to ride the wave all the way through all 3.
Right away.
In terms of determining the eligible remuneration, you're still going to have to look at that per period per employee.
Okay. And Ravi's asking, what if an employee was employed for half a period one claim period and then laid off? Is it still possible to apply for period one?
Yes, it is, so long as they were not without pay for 14 consecutive days within that period.
Okay. Keep the questions coming, folks. I got a couple more here, but if anybody else got them, please submit them on Facebook or the chat here. So coming from Facebook, Christine's asking for non-arm's length employee, for a non-arm's length employee that has earned less than $847 a week, can the wage subsidy be claimed?
Yes, it can be claimed. They'll be limited to 75% of their baseline remuneration. So the employee, that non-arm's length person would have had to be employed before March 15th.
Okay, and then I got a follow-up from Vicky on Facebook. She's asking, will the wage subsidy apply to an employee who was off on 6-month medical leave prior to March 15, 2020, with a plan in place to come back to work, a back to work program post-illness? A record of employment was required in 2019 for the employee to claim medical EI. They are now ready to come back to work. Would this be a returning employee or a new employee? Interesting.
Yeah, in terms of, so they would had to have remuneration for, it can't be have been without remuneration for 14 days. So basically, as long as depending on when they return, they may qualify for that period. If they were, so again, if they return, let's say today, they would qualify for period 3, but not 1 and 2.
Yeah, because they wouldn't have, they wouldn't actually have any of the actual baseline remuneration, then you can't do the comparison to beforehand. So they would be considered, a new employee. So it would be effective starting the date they were hired going forward.
Okay, and this is another one from Vicky. It might be redundant, but I'm gonna put it to you anyways. In the wording of, well, Steph just told me it's been answered, so I'm gonna not go there. Teresa is asking, so the claim period refers to when you pay an employee, and that is the payroll amounts, but reference period is where the revenue is where look at revenue for eligibility. So you're dropping revenues for the month of March, not the revenue from March 15th to April 11th. Talking about the periods of eligibility.
Yeah, that's correct. And so they are 2 different items. And so the reference period for eligibility on the far right only relates to your revenue test, whereas the claiming period is specific to the actual calculation of your eligible wages.
Okay. Any other questions, folks? Please put them out there either on Facebook or in the chat here. Been some great questions with a great presentation. I think the big takeaway for me was some clarity on the periods and how to what's eligible, not, and don't rush into this. There's time, and get it right the first time, as Ryan said. I think that's very important, because you can spend way more time correcting it later on. And if you get it right, take a little more the first time, get it right. I think that was great information, great advice. So I don't see any more coming. Steph, we got any more coming? Are we about done? No. Well, Gabriel's got one. Gabriel's getting his money's worth. That's good. Hey, maybe a silly question, but would we be able to go over an example of how to calculate? Would you be able to go over an example of how to calculate?
Revenues or the employee's remuneration?
It doesn't say how to calculate employees' remuneration. Thanks for adding that, Gabriel.
So we'll go back to the example we used earlier. So the amount of the subsidy itself is calculated as the greater of 2 items. And within each of those items, you're taking the least of 3 amounts. So the first one is 75% of the remuneration paid to a maximum of $847 per week, or nil for non-arm's length employees. And the next one is the least of 3 items again. So it's the eligible remuneration paid to the employee in respect of that week, or 75% of the baseline remuneration to a maximum of $847. So then going back to our example, so if someone was paid $2,000 per week prior to March 15th, and now they're being paid $750 a week after March 15th during the period, the period benefit period, then when you look at the least of those three amounts and the greater of the two, that individual will end up getting their full $750 a week, or the employer will get $750 a week for that employee because it's below the $147 threshold and above what they were being, 75% of what they were being paid before.
And this kind of goes back to one of the previous questions in terms of, you know, how much time is required for these calculations. I mean, this example is just for one single employee. And so, you know, you really do have to take the time to go, you know, employee by employee and go through these calculations and make sure that you know, you're following all the criteria and the steps, because when you submit that claim, you're submitting a single number, but that it's really going to be a different number that goes into that for every single one of your employees, and they all may have, you know, different circumstances that feed into the calculation.
And the Canada Revenue website listed on this page has an Excel spreadsheet that you can download and help you complete the calculations.
Oh, there you go. That's good advice. So looks like I got one last question. Just made Michelle's asking. So to confirm, if our last payroll is on March 31st, before the June 6th end date, then the wages that are paid on the payroll for both salary and part-time employees will be the last we can claim for the wage subsidy. And for the part-time employees, this may even go back to hours on May 25th-ish.
So the last payroll was the end of March, was that?
So to confirm, if our last payroll is May 31st,
Oh, May 31st, okay.
before the June 5th end date, then the wages that were paid on this payroll for both salary and part-time employees will be the last we can claim on the wage subsidy. And for part-time employees, this may even go back to hours on May 25th-ish.
Right, because the amounts have to be paid prior to June 6th.
Okay. Awesome. I think that's it. I don't think we have any more questions, but if they do have any more questions, you want to put your contact info up there again? There you go. Look at those pictures. Much younger. Oh my gosh. Ryan, look at facial hair. Holy cow. I got to get my shots in. Hey, that was great information. Well laid out. I think everybody got a lot of good stuff out of that. Really appreciate it. MMP's in Newport Village. They're there to help. They're great community partners. They're getting out in the community a lot and doing some really cool things. So, and do check out their website. We send out our bulletins with information that the government's doing. But if you want more detailed stuff, go to people like MMP, because they've got it all nailed down there. And you can call them for advice if you need to too. We've got a couple other things coming up. We're going to do a little bit. We did some commercial leasing webinar last week with Daniel Richardson from BTM Lawyers, and we're going to follow up with that with the sometime later this week or next week. And we got some productivity webinars coming up next week. And we're just talking with Service Canada and CRA. We're going to do something online with them probably early next week. So we will have the source, Service Canada and CRA, on there. Again, if you need anything else from the Chamber, if there's any topics you think you want to know more about, please call us. We're doing a ton of these webinars. It's been pretty fun. Steph's having a good time. But we got some great information. This is saved, archived on our site, right, Steph? It's all archived, so you can go back. Reach out to Ryan, reach out to Rochelle if you need more information on any of this accounting stuff. It's fantastic. Thanks. Thank you both. Thanks, MMP, for stepping up. Again, everybody out there, if you need more from the Chamber, we're here for you. We're not going anywhere. We've got your backs. Please contact us if we can help in any way, shape, or form. And if we don't have the answer, we know who to connect you with. So have a great business day out there. Stay safe and stay healthy. Thanks a lot, everybody.
That's great. Thanks, Mike.
Thank you.
Thanks, Stephanie.